Now let's talk to Lakshmi Iyer, who is the CEO of Kotak Investment Advisors, to understand the impact of this move on India's financial system. Hello Lakshmi, welcome to ET Now. Lakshmi, my first question to you is that what will be the impact on rupee, short term or long term?
So two sets of implications. If I talk about the near-term implication, it is clearly a sentiment boost because it is not going to lead to upfronting of the flows as of day one, because this is announced for a future date, which is specifically June of next year. So sentiment positive clearly will weigh in, because there is also certain section of the markets which are of the view that there could be some staggered participation into the fixed income, which we've already started seeing traces of that from the FPI front. From a long-term perspective, I think it will improve the durability of the flows. Approximately $23 billion of flows as again staggered from June 24 on to March 25 is not a bad number to go with, which will clearly render some more stability from a currency standpoint. So we need to keep that in mind, that asset allocators globally, they will allocate to a geography or an asset class if it is part of the index. And that's exactly what we have achieved today.
Right, Lakshmi, but do you feel that in the long run, the rupee might benefit and may get stronger?
So I would say the incremental deficit, we will still continue to run our deficits. That deficit or the external balance situation or balance of payment situation can improve for the better. It will not get completely nullified. So therefore, on an incremental basis, the quantum of depreciation, could be muted, because today we are getting bulk of the FPI flows into equities and little or nothing, in fact, outflows out of fixed income. This month is an exception. So I think it will clearly help give some confidence from a rupee standpoint. But, at a time when the dollar is gaining strength, obviously all Asian currencies typically tend to buckle under pressure. So that incremental impact could be muted. And obviously, because we have such high foreign exchange reserve, close to $600 billion, that also kind of helps bolster the cost. So I'm not rooting for a rupee appreciation, but I'm saying that the incremental stability, even at a time when the EM currency pack may not do well, I think India can pretty much shine bright there.
Right. So not perhaps, not help the rupee as such, but just, in comparison to other emerging market currencies, because of the dollar index appreciation, can help stabilize the Indian currency. But Lakshmi, what will be the impact on the bond yields?
So if you look at the past, few trading sessions, there was already a whiff in the market that something of this is likely to happen. So at a time when US yields were heading northward, you actually saw Indian yields head southward. So I would say quite a bit of that impact has already reflected in the bond yields. Incrementally, in the very near term, we're not really expecting a massive downward movement. But I must tell you that the yield cap, there is on the top side, how higher can the yields go? I think incrementally there will be a reasonably good yield cap, upwards of 720, 25. There will be a good yield cap, because there is an expectation that, the flows will come, either in a staggered manner or with a lag. And we must keep in mind that US yields are wobbly. The higher for longer narrative of the FOMC has spooked the bond yields in the US, and we cannot completely wish that away for Indian yields as well.
All right, Lakshmi, thank you so much for weighing in. Thank you so much for joining us today.